Hello, bankers. A very good evening to all of you. Welcome back. So, in this particular session, we are going to discuss around unit number 23, BFM Module C, which is all about Treasury Risk Management. Okay. So, we have done with these many topics of your BFM Module C, all about Treasury Management. So, introduction, then आपका Treasury product, international equity and debt, and last topic was around funding and regulatory aspect. So today in this particular session we are going to discuss treasury risk management. So with the help of number of MCQs and application based questions, we are going to discuss this particular unit in detail, right? So if you talk about the treasury risk management, so these are the subtopic which are generally part of this one: supervision and control of treasury, market risk, risk measure, var in duration, and using derivatives in risk management. Okay? So we will be practicing maximum question around these first three subtopic, because derivative, which is the next topic itself. Okay? So derivative product, which we will be practicing a lot of questions dedicated to derivative itself, right? तो वहां पे हम लोग उस ट्रेजरी और डेरिवेटिव का जो लिंक है उसको भी, तो वी आर गोइंग टू डिस्कस सम क्वेश्चंस बेस्ड ऑन डेरिवेटिव एज वेल। ऑलराइट, तो स्टार्ट करते हैं सेशन को विद वेरी फर्स्ट क्वेश्चन ऑन योर स्क्रीन। सो क्विकली गो थ्रू द क्वेश्चन एंड ट्राई टू अंडरस्टैंड एंड आंसर दिस पर्टिकुलर वन। Which of the following statement about treasury risk management is incorrect? So you have to find out the incorrect statement with regard to treasury risk management. Okay? So treasury activities involve high leverage because they mostly have a position in derivatives and all, okay? Meaning that a small market fluctuation can result in a significant capital loss. 100% true. Okay? So statement one is 100% aligned with the treasury risk things and all. Okay? So like let's say if you enter in any derivative contract like future contract event, okay, let's say if you have position, long position in commodities or currencies or even any indices, okay, so you just have to pay the initial amount, that is very minimal amount, that is called margin. Okay? In case of OTC, even margin is also not required, right? So that is the one. So sometimes if market behave in the just adverse manner of your position, so that is going to make a huge loss in the market. So first one is right here. The risk exposure of treasury operation is limited to principal amount similar to traditional bank loan. No, this is wrong, team. It is not limited to the principal amount, right? Sometime what happen, like let's say especially in case of commodities market, ठीक है? अगर आप लोगों ने कभी commodities के अंदर trade किया होगा, so the market fluctuates in like a very dynamic flow. So if there is something news about that specific commodity, तो उसकी जो prices के changes हैं, ठीक है, they are very drastic and they become a reason for a huge loss borne by the investors. Sometimes it is for the bank also. ठीक है? So this is आपका wrong, because see, you are having the advantages of leverage in this particular market. Just like sometime if you missed your exposure limit and all, ठीक है, तो कहीं ना कहीं उसकी वजह से बहुत बड़ा नुकसान हो सकता है. दिस स्टेटमेंट इज इनएक्यूरेट. ठीक है? ट्रेजरी रिस्क आर मैनेज यूजिंग एक्सपोजर सीलिंग, trading limit, and stop loss mechanism. 100% true. To manage these kind of risk, what we generally do, we have exposure ceiling, commodity wise, portfolio wise, or even trade wise, day wise, and week wise, and all, and even about the overall open position. We use trading limits also at a time, like what till what volume we can extend our trade, and even we use stop losses to minimize our losses in the market itself, right? Market risk in treasury operation include liquidity risk, interest rate risk, and currency risk. Yeah, again, this is also correct. Yeah. So whenever we have position in this particular one, so sometime let's say if you have open position in some securities, they become partially illiquid or fully illiquid, right? Interest rate changes. Let's say if RBI change some, let's say if RBI increase the or decrease the repo rate, it will impact your current bond positioning or the other securities positioning, and even currencies also, because in treasury itself or in market risk itself, we are having position in multiple currencies, so that can also affect your portfolio adversely, right? So what will be our correct answer? Because option B is incorrect, so that is the right answer for this one. So treasury operation involve high leverage, meaning bank can take a large position with relatively low capital allocation. Unlike traditional loan, where the risk is mostly limited to the principal and interest, treasury can exceed the invested capital due to market volatility, like forex fluctuations, bond changes, and all. All right, next one. Which of the following risk control measure in treasury operation is designed to prevent excessive trading losses? So what you will use in this particular case, stop losses limit will be the most suitable one. Yeah, like it is the kind of things, let's say what is stop losses, ठीक है? Let's say you have purchased XYZ securities limited, ठीक है, at 100 rupees, ठीक है? Let's say as per your bank risk appetite policy, your maximum loss we can bond in this particular security is rupees 2. So that means your stop loss will be at 98, ठीक है? So आप इसको, like, you do not have to keep an eye on that particular prices fluctuation and all. What you will do, once you will enter in this particular trade, at the time when while you enter in this particular trade, you will put your stop loss also, ठीक है? तो हम लोग क्या कहते हैं, आपका जैसे हमने एक्स वाई सी खरीदा, उसी के साथ आपका सेलिंग के लिए विल हैव one bit that is called stop loss. Stop loss is like that is something linked with our loss bearing capacity or risk appetite, कि हम 2 रुपए से ज्यादा का लॉस आपका इसमें नहीं झेल सकते. So what you will do, your trader will put a stop loss at 98. अगर आप उसके बाद क्या होता है, if prices came down to 98, your trade will already automatically executed है, तो ये आपका वहां पे सेल हो जाएगा. लेट्स से वी हैव बाय ऑन दिस पर्टिकुलर वन, सो इट विल ऑटोमेटिकली सेल एट 98. इसके बाद अगर ये नीचे कितना भी आता है, सो यू विल बी एग्जिटिंग फ्रॉम दैट पर्टिकुलर सिचुएशन, उसका आपके ऊपर कोई इम्पैक्ट नहीं पड़ेगा. ठीक, इवन इन सम केसेस इट ऑल्सो हैपन कि it came down to 97, then it went back to let's say 110. So again you are going to make like no loss, no profit in that particular situation, because what will happen, आपका 98 जैसे ये ट्रिगर करेगा, इट विल एग्जीक्यूट इट, तो उसके बाद नीचे आने के बाद ऊपर भी जाएगा, तो आपका फिर कोई उसमें ओपन पोजीशन नहीं होगा, बिकॉज योर ट्रेड विल गेट एग्जीक्यूटेड. आपने बाई किया था 100 पे, 98 पे ऑटोमेटिकली सेल हो गया, फिर नीचे आके ऊपर गया, दैट इज लाइक फिर आप उस ट्रेड से एग्जिट हो जाएंगे. बट इट हेल्प ऑल्सो कि आप लाइक समटाइम कई बार ऐसा देखा गया कि लाइक जैसे ये स्टॉप लॉसेस ब्रेक हुए, उसके बाद वो काफी नीचे गया, सो इन दैट पर्टिकुलर सिचुएशन आप अपने पोर्टफोलियो को क्या कर पाएंगे, प्रिवेंट कर पाएंगे. ठीक है. So stop loss are used in treasury trading to prevent excessive loss by automatically closing position when losses exceed a predefined threshold, as in our case it was 98, or the loss bearing capacity was 2 rupees per security. For example, a bank trader has USD INR position with a stop loss limit of rupees 1, rupee 1 a moment. The trade will automatically close if the rate move beyond this particular set limit. Okay? So remaining are incorrect. I hope this is clear to all of you. Right? Next one. VAR, value at risk, is an essential risk measure in treasury management. Basically, we use VAR for the market risk calculation, or while we generally place the capital charge against the market risk, right? So which of the following best describe the purpose of VAR? So it generally helps us to define, to get to know about the expected losses in a defined scenario, right? So हमने पढ़ा था ना आपका कि this much of confidence level, 99% or 95% confidence level, ठीक है, given in a given time horizon, it can be 1 day var, 6 days, 10 days, or 1 month, 3 months, and all. And it is kind of for the expected situations. ठीक है, so जहाँ पे जो normal market conditions है उनके लिए, ठीक है, for abnormal market condition or for any kind of stressful situation, we go, apart from VAR, we generally go for the your stress testing and all. ठीक है. So it measures the worst possible losses over a specified time frame under normal market condition at a given confidence level. Okay? Option A only is the right answer for this particular one, right? So VAR, value at risk, estimate the potential loss in the value of portfolio due to a market fluctuation with a given probability over a specific time horizon. A day, let's say, one day VAR of 10 crore rupees at 95% confidence level means there is only 5% probability of losing more than 10 crores in a single day under normal market conditions. Okay? So it applies on normal market condition. Please do remember this. Which of the following best describe how interest rate risk affect treasury operation? So interest rate risk, like we can have advantages or we can have like losses also. Again, it depends because interest rate and like they have an inverse relation, basically we can say. Again, a rise in interest rate a rise in interest rate decrease the value of fixed income securities. So this is wrong. Okay. Interest rate movement have no impact. They have like we have convexity and they have adverse impact on the net interest margin itself. A decline in interest rate cause bond prices will to rise, leading to potential treasury gain. 100% true. So this is 100% true. Interest rate risk is only relevant for long-term securities and has no impact on short-term money market. They does have impact on short-term money market instrument, and even this is the very first market who generally get affected with the interest rate. Like let's say if RBI will make any changes in repo rate, so money market is the very first market who will get affected through that particular change itself, right? So C will be right answer. Yes. So interest rate and bonds prices have an inverse relationship. When interest rate fall, market value of fixed income securities will increase, benefiting the treasury operation. If RBI lower repo rate, the value of government securities bonds will rise, creating and trading profit for the bank treasury debt, other banks treasury desk itself, right? So this is the one. Next one. Which of the following strategies commonly used in treasury operation to has foreign exchange stream? So, like it is a derivative, so you have to find out that particular derivative one. Okay. So, which of the following strategies is commonly used in treasury operation to hedge? Hedge means to minimize your losses. Okay. So, हम hedge contract में enter करने का only motive is to prevent our existing portfolios or open position. Okay, let's say if you have 100 crore rupees USD INR in your portfolio, and there are some, like let's say if you have open position, you have buy position in dollar. There are some news around the globe कि dollar will come down. So you have two options. One is you can exit from that particular trade by selling at the market prices or bearing that existing loss. Another one is like if you your analysis says that okay, this fluctuation is temporary and you want to hold that particular one. So in that case, what you can do, you can enter into a hedge contract. You can enter interest rate future or the currency future. So you have so many options available in the market itself, right? Or even forward rate agreements also. Okay. So using stop loss order, no, this is not going to help in stop loss. Okay. Engaging in forward contract to lock in exchange rate, 100% we can do this. Maintaining excess CRR, no. In high, no. Okay. Option B will be right answer for this one. So forward contract, you can enter into the currency forward. As I gave you an example, na, let's say we have 100 crore rupees dollar in our accounts. So what we can do based without investing a single rupee by leveraging this particular fund, you can make, let's say this is your spot holding. Current market holding is 100 crore rupees. Based on this only, you can enter into a dollar future. So future or forward contract, and you can sell it. Okay? So in market A or in cash, you have buy position, and what we are doing here, we are making a sell position. So after making this particular position, you are not going to bear a single rupee loss. And even like whenever we entered into hedging, so it close your upside and downside potentials. ठीक है, तो इसके बाद ना तो आपको 1 रुपए का फायदा होगा, ना ही आपको 1 रुपए का लॉस होगा, ठीक है, दैट इज द वन, ठीक है, लाइक बिकॉज if you'll gain from this market, you'll loss from this market, or vice versa, ठीक है, if you gain from this market, you'll make loss from this particular market. In that situation, what we generally do, we know that situation is temporary, we wait for the correction in the market, and then we exit from one portfolio. Let's say अगर लगता है कि और like now this is the time for the bounce back, we will exit from here and we will remain in this particular one. After that time, we can leverage from that particular situation also. Okay? So forward contract are used forex risk management to lock in exchange rate today for a future transaction. This strategy eliminate uncertainty about the future currency fluctuations, protecting against the forex losses. An Indian exporter expecting to receive 1 million US dollar in 3 months may sell forward at today's rate to hedge against depreciation of dollar itself. Like they have given one example also. Let's say as an exporter, you are going to receive 1 million US dollar. Your invoice is generated in dollar itself. If you want to like आप उस वैल्यू पे स्टिक रहना चाहते हैं कि $1 इक्वल टू suppose that 84 rupees, ठीक है, so this is the current rate. So what you can do, like अगर आप यहाँ पे दोनों साइड ओपन हो सकते हैं, हो सकता है आपको ये ऊपर भी जाए, $1 इक्वल टू हो सकता है डॉलर और ज्यादा स्ट्रांग हो गया 87 हो जाए, तो उसमें आपका फायदा होगा, बट देयर इज अ प्रोबेबिलिटी कि आपका 84 होके आपका 80 भी हो सकता है, ठीक है. सो इफ यू वांट टू, like if you do not want to take any kind of risk, so what you will do, you can enter into a forward contract or future contract and you can hedge that particular position, ठीक है. So जिससे, क्योंकि why it is necessary, because you have to make your other plan based on this amount itself, right? So आप fluctuations के भरोसे बैठोगे, that means you are in a risk, right? Next one, which of the following correctly describe the impact of basis risk in treasury? I hope you guys remember basis risk. Basis risk is basically where we have one benchmark. So where your interest rate are linked with some benchmark. Okay, and if there is, if like let's say this is the bond yield and this is something your benchmark is doing, ठीक है, तो अब इनकी वजह से there will be a negative impact on your NIM, ठीक है, so there will be some fluctuation in your NIM, तो वो उस चीज को कवर अप करने के लिए basis risk is basically our bonds or the security which we are holding that is linked with some indices. So due to some fluctuation, sometime it create a problem for the bank, it move in the adverse direction. So that risk is generally known as basis risk. Okay? So now the question is, which of the following correctly describe the impact of basis risk in treasury management? So basic risk arises when there is a mismatch between interest rate of asset and liabilities, leading to fluctuation in net interest income. Okay? Mismatch between interest rate of assets and liabilities बिल्कुल हो सकता है, ठीक है. This is 100% true. Basis risk occur when a financial institution face liquidity shortage. No. Basis risk is the risk that counterparty in financial contract will fail. It is counterparty risk. Basis risk only apply to foreign exchange. No. It is not only about the foreign exchange. It is all about any interest bearing security, right? So option A will be right answer for this one. Okay? So basis risk is a type of interest rate risk that occurs when assets and liabilities are linked to different benchmark rate like repo, MIBOR, MS, and the others one, okay, leading to fluctuation in net interest margin itself. Okay? It is a common in banking book where assets and liabilities are repriced at different interval or rates itself. Okay? Next one, which of the following measure is most effective in mitigating liquidity risk management? This is a very easy question. Most effective in mitigating liquidity risk in treasury. So increasing reliance on short-term wholesale funding. No, it will become concentration risk. So we will not suggest this. Holding high quality liquid asset. Yes, 100%. So this will help. And at the time of stressful situation, what we can do, we can liquidate these particular one. So HQLA, they always support the short-term liquidity position, So without any doubt, B will be the right answer for this one. Okay? So liquidity risk arises when bank fail to meet short-term funding requirements. Holding high-quality liquid assets ensure that a bank can generate liquidity during a market stress. This aligned with the liquidity coverage ratio. I hope you remember this particular one. LCR. So high quality liquid asset divided by net cash outflow in 30 calendar days. And the Basel 3, which required this. All right, next one. अगले क्वेश्चन पे चलते हैं. In the context of foreign exchange risk management, what is the primary advantages of using an option contract over a forward contract? ठीक है. So why we are using option over forward? ठीक है. So देखो क्या होता है. Option is a exchange traded derivatives. Forward are OTC. ठीक है. So in this particular case, there is a counterparty risk involved. In this particular case, these are traded on recognized stock exchanges. So एक्सचेंज स्टैंड द गारंटी. ठीक है. तो यहाँ पे डिफॉल्ट होने की काउंटर पार्टी की जो आपकी प्रोबेबिलिटी है वो ना के बराबर है. दो वी विल चेक द क्वेश्चंस. ऑप्शन अलाउ बायर्स hedge against currency fluctuations while retaining the potential benefit from favorable exchange rate movements. Why we are going for this? In the context of foreign exchange risk management, what is the primary advantages using options? So option allow buyer to hedge against the currency fluctuations while retaining the potential benefit. True. Options require no upfront cost. It required forward required no ops this. So basically it is as like what I can interpret from the options ki which option is correct. Okay. About the options. Option eliminate all foreign. We cannot eliminate all foreign. Okay. Option guarantee of fixed exchange rate. No. Option A only will be right answer for this one. Okay. So options contract provide asymmetrical protections, meanings the buyer has a right but no obligations to execute the contract. If market rate move favorably, the buyer can choose not to exercise the options. If market rate move unfavorably, the buyer can exercise the option and limit the losses as well. Because this is all about the option contract and what is options that we have practiced a lot in our case of derivative. And even in while we come to the our next session derivatives ke andar, I'll come up with so many questions, or even there are some case studies based on that options trading also about like in the money, at the money, out the money situation, or profit and losses made by the investors and all that we will discuss in that particular one for sure. Okay. Which of the following is a key feature of stress testing in treasury risk management? So stress testing, usually we use VAR for the market risk, but stress testing is beyond the kind of expected losses, right? It is usually for unexpected situations आपका, ठीक है, जहाँ पे like it is generally we generally do the stress testing for our kind of abnormal market conditions. ठीक है. तो जैसे आपका जैसे like there are so many situation like global financial crisis or COVID like situation and all. ठीक है. So it assume market condition remain stable. No. It only consider past market events. No. It evaluate the impact of extreme market condition on a bank capital in this. Yes. It ensure that risk management strategies focus solely on historical data. No. Option C will be right answer for this particular one. Okay. So stress testing assess how serve financial shock impact of bank liquidity, capital, and solvency. It include hypothetical scenarios such as interest rate spike, market crashes, or liquidity crisis. So these are the pointers. Or ये basically on the basis of these parameters we generally do the simulation things. तो हम simulate करके आपका we create different situations, scenarios आपका, and accordingly we are prepared for that worst case scenario, right? Next one. Which of the following is a major limitation of VAR as a risk management tool in treasury operation? So VAR का limitation is आपका it is limited to like a defined time horizon, confidence, and the normal market condition. It is not suitable for abnormal market conditions, right? So VAR provide a worst case scenario loss estimation, making it overly conservative. VAR does not account for, so option B, VAR does not account for extreme tail end risk and assume normal market condition only. Okay? So option B, without any doubt, will be right answer for this one. So VAR measure potential losses in a normal market condition, but fail to capture extreme events, also known as black swan events. It assumes historical patterns will continue, making it less effective in volatile market itself. Right. Next one. In treasury risk management, which of the primary function of gap analysis? Take a gap is like आपका there is a gap between assets and liabilities. ठीक है, that is the one. And AL management of ALM is a primary or core function of your treasury department itself. ठीक है, तो कहीं ना कहीं we have to do that analysis and accordingly we have to place our funds also. ठीक है, so to measure the difference between bank foreign, to assess liquidity mismatch by comprising asset and liabilities maturities across odd time taken, to forecast the macroeconomics indicators to determine probability of counterparty. No, option B will be right answer. Okay. So gap analysis is used to measure interest rate risk and liquidity risk by identifying mismatch between interest rate sensitives and interest rate sensitive assets and liabilities. A positive gap means your receivable are more than your payables, and negative gap is your payable are greater than your receivables. Same. So means receive are faster than liabilities. This is the same thing. Next one. Under Basel III regulations, what is the primary purpose of counter cyclical capital buffers? Okay. So while we gone through this Basel III requirements or guidelines, okay, so CCB or your counter cyclical buffers is something like it is like during that 2007-8 financial crisis, there were some bank, especially from Nordic nations, they does not get affected with that overall worldwide recession. Reason being, what they usually do, like at their get good time, they generally keep additional buffer and they use that amount in their bad time. ठीक है, so वहां से हमने ये learning लिया कि when you are having a good time, ठीक है, as a bank, so जब आपकी earnings ज़्यादा हो रही है, so in your peak time, so you keep some additional buffer and we can use that particular buffer at the time of like if there is some economic crisis and all, ठीक है, so उस समय आप उस मतलब जनरल साइकोलॉजी है आपका, ठीक है, कि जब हमारे अच्छा पैसा कमा रहे होते हैं तो उसको सेव करो फॉर द आपका रिटायरमेंट पीरियड और जब आपकी अर्निंग्स थोड़ा सा वीक होंगे. सो दैट इज द लॉजिक ऑफ दिस आपका काउंटर साइक्लिकल बफर्स. ठीक है, सो काउंटर साइक्लिकल, ठीक है, जो साइकिल है उसके अगेंस्ट हम लोग आपका करें कि अगर पीक है तो ज्यादा सेव करो, अगर लो है तो वहां पे हम उसको यूज करेंगे. ठीक है, सो टू इंक्रीज बैंक लिक्विडिटी कवरेज रेशियो ड्यूरिंग to ensure bank accumulate capital buffer during good time and to observe losses in economic downturns. Okay, so bilkul option B will be right answer for this one. So counter cyclical buffer in macroprudential tools requiring bank to build additional capital buffer when the economy is strong, ensuring stability during the downturn. This buffer is released when economic conditions are deteriorate, allowing bank to absorb the credit losses as well. Okay, next one. What is the primary objective of implementing rolling settlement system in treasury? Rolling settlement is basically settlement on T+1 और T+2 और the same day आपका, ठीक है, T+0 आपका. तो ये जो सेटलमेंट्स होते हैं दीज आर जनरली नोन फॉर रोलिंग सेटलमेंट. तो जहां पे लाइक जितना जल्दी सेटल होगा उतना जल्दी उतना कम आपका काउंटर पार्टी रिस्क होगा. ठीक है, सो टू एलिमिनेट द रिस्क ऑफ काउंटर पार्टी डिफॉल्ट इन फॉरेन एक्सचेंज, to ensure all securities transaction are settled in real time without time delays. It is something about the settlement days and all. Okay, so I'll go with this one. To reduce settlement risk by shortening the time gap between trade. हाँ बिल्कुल, हाँ, we will go for option 3. ठीक है, देखो सारे options आपका align है, but the best what I found till here is option C, to provide regulatory oversight on all. No, so to reduce settlement risk by shortening the time gap between trade execution and settlements आपका. So C should be right. ये दोनों भी सही है, but the exact like uses of the rolling settlement is this कि जितना minimal कर सकते हो उतना करें. ठीक है, so C is the right answer. ठीक है, so rolling settlement means trade are settled on T+1 or T+2 or reducing counterparty risk and settlement failures. Before rolling settlement, securities were settled on a fixed settlement day, like Friday or Thursday and all. Okay? Increasing exposure to price fluctuation that time. Okay? Next one. Which of the following best describe the purpose of duration matching in Treasury Risk Management? So I hope you remember this particular terminology, duration. It is something related to bond investing. Okay? So bonds के case में we have two terms. One is maturity, another one is duration. Okay? So maturity is like that is defined by the issuer itself. Okay? Let's say there is a company or government of India. They come up with the bonds which will mature in 15 years. Okay? So that is the maturity period. Okay? So government will repay that particular debt after 15 years. Okay? That means to the maturity. Okay? The duration is like it is we generally calculate duration on behalf of investors. Okay? If I entered in this particular bond, how long it will take to make me profit. ठीक है सो अगर हम उस बॉन्ड में पैसा इन्वेस्ट करते हैं तो कितने समय के बाद मेरा वो प्रॉफिट जनरेट करना स्टार्ट होगा. ठीक है लेट्स से देयर इज अ पर्सन who purchased that bond and who sell that bond after some time. So the period he hold that particular bond, let's say it is 3 years. That 3 years is generally known as duration. That means your duration can be less than equal to maturity. In case of zero coupon bonds, duration is equal to maturity because they do not pay any kind of periodical returns and all. They get issued on discount and all. ठीक है तो ये सारे लॉजिक जिनको हमने समझा था पास्ट में. ठीक है सो ड्यूरेशन मैचिंग करने का क्या उद्देश्य है? टू हेल्प अगेंस्ट फॉरेन एक्सचेंज फ्लक्चुएशन बाय maintaining offsetting currency position to ensure that asset and liabilities maturities are aligned to minimize interest rate risk exposure to predict the future inflation to reduce this one. Okay? So option B will be right answer for this one. Okay? So duration matching aligned interest rate sensitive assets and liabilities to minimize exposure to rate exchanges. If a bank has long-term liabilities, it must hold a long-term asset to prevent interest rate mismatch also. Okay? Next one. Which of the following risk matrix is most appropriate for measuring the potential losses due to extreme market events in treasury operation? So what will be your correct answer? Stress testing. Okay. But here stress testing is the advanced version of VAR, which include the stress testing also. That is generally known as expected shortfall. Okay, first one only will be right answer for this one. Okay? So in this is a kind of upgradation of your existing VAR system. ठीक है तो VAR आपका जनरली क्या होता है? वैल्यू एट रिस्क आपका जो एक डिफाइन एक नॉर्मल मार्केट कंडीशंस के लिए अप्लाई होता है. बट इन केस ऑफ इसको हम लोग सी वार के नाम से भी जानते हैं. ठीक है एक्सपेक्टेड शॉर्टफॉल कंडीशनल वार विच अप्लाइज टू दोज एबनॉर्मल मार्केट कंडीशंस ऑल्सो. ठीक है तो ये उनको भी कंसीडर आपका कर रहा होता है. आई गेस similar type of questions we have discussed in our module B. आपका मार्केट रिस्क वाले में भी हमने ये डिस्कस किए होंगे. ठीक है सो एक्सपेक्टेड शॉर्टफॉल ES also known as conditional ward conditional ward sorry measure the expected losses in worst case tail events beyond the VAR threshold. Unlike VAR which provide a cutoff loss, ES calculate the average loss beyond VAR, making it more reliable for the stress scenario. Okay, so please do remember this one. In the extent of foreign exchange risk, which of the following scenario best describe translation risk for a multinational corporation MNC? ठीक है तो ट्रांसलेशन इज बेसिकली आपका यहाँ पे वन कंट्री एसेट they are converting in another country's asset, so that can be your risk. Loss incurred due to currency fluctuation when settling an international invoice, foreign exchange. Okay, a decrease in value of foreign asset when consolidated into the parent company balance sheet. बिल्कुल सही. ठीक है the impact of unexpected foreign exchange no and increase no. Option B will be right answer for this one. Okay? So translation risk or accounting risk arise when a company with foreign subsidiaries translate financial statement into a home currency. Okay? In the foreign currency depreciate, if the foreign currency depreciate, the report value of asset and liabilities in the consolidated balance sheet will also decrease. Okay? So that is the meaning of this. Next one. Under Basel 3, how does net stable funding ratio NSFR mitigate long-term funding risk in a bank treasury operations? Okay? So by keeping stable source of funding. Okay? So by requiring bank to hold high quality liquid asset, no, this is about the LCR. By ensuring that bank long-term assets are funded by stable sources like customer deposit, long-term bonds, by imposing limit on interbank by restricting bank the other. So option, by ensuring that a bank long-term asset are funded by stable source, that is the best source in this particular case. Okay? So NSFR ensure that bank maintains stable funding sources for their long-term asset, reducing reliance on volatile short-term fundings. So where ASF include equity, long-term deposits, bonds, and RSF team required sources आपका that long loans and long-term assets. आपका it should be managed at more than greater than 100%, and available stable funding divided by required stable funding. That is the basic formula which we generally use to calculate your NSFR. Okay? Next one. In a rising interest rate environment, which of the following hedging strategy would be the most effective in minimizing interest rate risk of a bank fixed income portion? Like selling interest rate future, it is rising. Okay, increasing duration of bond, no. Investing in long-term fixed rate government securities, in no. Option A should be right answer for this one because they are inversely related. So if that is rising, so that can help in this particular situation. Okay? So when interest rate rise, bond price will fall. Okay? Yeah, selling interest rate future allow a bank to profit from failing from falling bond prices, offsetting losses in bond portfolio also. Okay, next one. Which of the following stress testing techniques would be the most appropriate for assessing the impact of an extreme liquidity crisis on a bank treasury operations team? Which of the following stress testing techniques would be most appropriate to assess the impact of extreme liquidity crisis on this team? So historical extreme crisis on the bank treasury. हाँ, so extreme है, so we can use historical scenario analysis based on the previous financial crisis like 7-8 global financial crisis. Monte Carlo is not effective for this one. Credit is not. No. So option A should be right answer for this one. Like it is a base key that happened during the period of 7-8. If there is a similar situations, so we can calculate the VAR in that situation. Yes, हाँ, ठीक है. Next one. A bank has a portfolio of bond with high duration and convexity. ठीक है. In a scenario where interest rate experience a sharp rise, what is the expected impact on the portfolio level? ठीक है. So bond with a high duration, we have high duration long term position, the convexity in a scenario when interest rate experience a sharp rise. ठीक, अगर interest rate बढ़ेंगे so क्या होगा आपका, there will be a decrease आपका, the value will decline sharply due to inverse relationship of rate. The convexity affect the neutralize, no. The convexity means आपका they have inverse relationship. The value will increase, no. Option A will be right answer for this particular one because this we have practiced so many times. So bond price have an inverse relationship with interest rate. High duration imply higher sensitivity to rate changes, and convexity measure curvature of the sensitivity. When interest rate rise, bond value will fall, and high duration amplify this effect, leading to a sharper decline. Okay? So option A was the right answer for this one. Next one. Which of the following best describe the primary purpose of stress testing in market risk management? Okay, now I hope you guys are like more comfortable with these type of questions. Yeah, because we have practiced a lot of questions based on these particular things. So calculate value at risk using historical data. The primary purpose of stress testing, no. VAR is not going to help you in this particular one. Okay. To analyze the probability of default on not only this, to assess a portfolio performances under extreme but plausible market condition. This can help you to predict future asset price movement with the machine learning's node. Option C will be right answer. So stress testing evaluate the resilience of portfolio by simulating extreme market condition such as financial crisis, geopolitical shock, rapid interest rate hike, like unlike war, which focus on normal market conditions. Next one, which of the following is not a fundamental component of robust market risk management framework in bank? Not a fundamental component of robust market risk management. So, risk identification and measurement, hedging risk and mitigation, yes. Complete reliance on historical data, no. We will not go for this. Stress testing, yes. Okay? So, option C will be right answer for this particular one. Okay? So, an effective market risk management framework involve identifying risk, implementing mitigation strategies, and conducting stress tests. Okay? Next one. Under Basel III market framework, which of the following risk measurement methodologies is considered more accurate for capturing tail risk and extreme market events using VAR itself? So what we will use? Expected shortfall. This is the kind of extended VAR. Okay? So VAR is like VAR, the normal VAR, which is applicable to the market conditions. VAR is a good tool for the normal market situation. Okay? So now this expected shortfall आपका that is also a VAR method itself, because which generally account the, we can say, abnormal market situation also based on that VAR tool itself, right? So option B will be right answer for this one. Okay? So fundamental review of trading books, Basel 3 fundamental review of the trading book, mandate expected shortfall instead of VAR, because ES better कंडीशनल वॉर इसको हम लोग बोलते हैं वार. अभी एक क्वेश्चन में हमने डिस्कस किया था. बेटर कैप्चर द टेल रिस्क एंड एक्सट्रीम लॉस in a volatile market. Yeah. So this is the one thing. Next one. A bank is conducting stress testing as a part of its market risk management framework. Which of the following best describe the primary objective of stress testing? Okay? It is usually for the unexpected market situation or abnormal market conditions. Okay? So to predict future market return based on past trend, no. To assess the impact of extreme but plausible market condition on the bank portfolio. So B will be right answer. ठीक है, या ये तो बिल्कुल I hope दिमाग में छप गए होंगे सबके. ठीक है, next one. Which of the following best explain how liquidity risk can exhibit market risk in the financial institution? ठीक है, so liquidity can lead to the market risk. आपका like होता है ना, like when your position or portfolio become partially or fully illiquid, right? So increased liquidity lead to higher trading volumes. Okay, acha, that is about the liquidity when bank won't be able to meet their short-term obligations. Increased liquidity leads to higher trading volumes, reducing market volatility. Illiquid market can amplify price swings. Yes, हाँ बिल्कुल हो सकता है. ठीक है, price swings, making it harder to exit from the position itself. It can be a partially illiquid or a fully illiquid situation also, depend on the security itself. So liquidity risk arises when asset cannot be easily sold without significant price impact. In volatile market, illiquidity worsen price decline, increasing market risk exposure also. Okay, next one. A financial institution is heavily exposed to interest rate risk due to its long duration bond portfolio. Which of the following strategies would be most effective in mitigating this risk? Okay? So, a financial institution is heavily exposed to interest rate risk due to long duration. Okay? Which of the following strategies would be most effective to mitigate this? Entering into an interest rate swap, where institution pay a fixed rate and receive a floating rate. Again, increased duration of, this can be one option. Increased duration of bonds portfolio by purchasing more long term, investing high rate. Option A should be right answer for this one. Okay, as what I can interpret from this question. Yes. So interest rate swap, which is a derivative, allow the institution to hedge against rising interest rate by converting its fixed rate exposure into floating rate payments. If interest rate rise, floating rate payments increase while the fixed payment remains stable during overall market risk exposure also. Okay, next one. Which of the following scenario is an example of wrong way risk where market risk and counterparty risk are positively correlated? So wrong way risk, it is something. So a bank has its exposure using government NO. A firm enter into a credit default swap. ठीक है? हाँ, wrong. I just हाँ. So ये generally क्या होता है? Like let's say we have made some positions or some hedging positions, and that counterparty fail in that situation. I hope I gave you an example about the uh, credit default swap. ठीक है? Let's say your bank enter with some other institution in a credit default swap, and at the time of that default occurrence, so while we approach to that protection seller, they also become default or insolvent. That is the kind of wrong way risk आपका, ठीक है? So a firm entered into a credit default swap with a counterparty that has a weak credit profile. A company use currency. No, option B is the right answer for this one. You do not have to go for the further one also. So wrong way risk occur when credit exposure increase, precisely when the counterparty creditworthiness deteriorate. In this case, if the counterparty default during a financial crisis, the hedge may fail and compounding losses. तो compound loss कैसे होगा यहाँ पे? एक तो जिसको हमने लोन दिया था वो तो डिफॉल्ट हुआ ही हुआ, जहां से हमने उसका प्रोटेक्शन बाय किया था उसको हमने प्रीमियम दिया था, तो वहां से हमारा ऑल लॉस हो जाएगा. सो दैट इज द काइंड ऑफ थिंग्स विच इज जनरली पार्ट ऑफ दिस. वेरी नाइस कॉन्सेप्ट. हाँ, वेरी नाइस एंड वेरी इंटरेस्टिंग वन. ठीक है, चलो नेक्स्ट वन. अंडर द फंडामेंटल रिव्यू ऑफ ट्रेडिंग books in Basel 3, how has the calculation of market risk capital requirement changed compared to previous Basel 2? ठीक है, तो we have entered to ES बार आपका या आपका conditional what. ठीक है, so risk weight asset for capital requirement are now fixed. No, they are not, irrespective of market condition. No, this is wrong. ठीक है, the uses stress expected shortfall, expected shortfall, stress expected shortfall has replaced the value at risk for this. Yes, only standardized approach. No, option B is the right answer for this one. So expected shortfall, yeah, conditional war is used in the as per this particular one. Next one. During a financial crisis, a hedge fund with large leverage position in equity derivative face a margin call. Margin call is basically their M2M value is going down. Mark to market value is going down. जैसे हमने कोई आपका इक्विटी का फ्यूचर खरीदा एंड like we were bullish about that particular security, but due to market changes उसका प्राइस क्या हो गया, नीचे आने लग गया. ठीक है, सो नाउ वी विल गॉट मार्जिन कॉल फ्रॉम आवर ब्रोकर. वी हैव टू मेंटेन दैट पर्टिकुलर मार्जिन ऑन M2M लेवल. ठीक है, जो भी इसका आपका डिसाइडेड था. सो एंड फोर्स टू लिक्विडेट इट्स होल्डिंग रैपिडली. अब वहां पे कंडीशन ऐसी है कि और आने वाले समय में नीचे जा सकता है. सो फर्स्ट यू हैव टू डिपॉजिट द मार्जिन एंड यू, it is advised by the broker ki you should exit from this particular position because there are high chances of worsening this adverse market movement. ठीक है, price movement. This result in widespread market sell off. अब इससे मतलब if it is entire market wide, ठीक है, it can create a systemic risk. Which what type of market risk phenomena does the scenario represent? Systemic risk and systemic risk and market contagion. ठीक है, option A only correct answer. ठीक है, systemic risk is basically failure of one institution lead to failure of multiple institution, or failure of one market lead to failure of multiple markets. ठीक है, so that is failure of one which create a ripple effect in the market, that is systematic risk, and it affect the other market also. It is effect to other market also. That relation, that interconnectedness among the market is generally known as market contagion, right? So option A will be right answer here. So systemic risk arises when financial distress at one institution spread to others, causing widespread market disruptions, force liquidations, and margin calls create a contagion effect. leading to price crashes and market freezes. ठीक है, next one. A hedge fund engage in carry trade. Carry trade is kind of like where we are holding that particular trade for next trading day. ठीक है, it is kind of a डिलीवरी ट्रेड. ठीक है, जैसे होता है ना, एक तो हम डे ट्रेड करते हैं इंट्राडे, दूसरा होता है डिलीवरी में, क्या आप उसको कल के लिए या परसों के लिए होल्ड करना चाह रहे हो. ठीक है, बाय बोरोविंग अ लो इंटरेस्ट करेंसी रेट एंड investing in high interest currency rate, what market risk does the fund face if global risks sentiment suddenly deteriorate. ठीक है, तो क्या हो सकता है. So what happened in this particular case? Let's say you have open position in INR. ठीक है, so let's say मतलब USD INR के अंदर, या आपको ऐसा लगता है कि आने वाले समय में, या let's assume there is a US investor who have long position in USD INR. ठीक है, या short position in USD INR, or even you can also have that particular position कि हमें लगता है कि डॉलर आने वाले समय में बढ़ेगा. ठीक है, सॉरी, आपका रुपी बढ़ेगा, डॉलर घटेगा. ठीक है, सो बिकॉज रुपी क्या है आपका, इट बिलोंग्स टू एमर्जिंग करेंसी, तो जहां पे जो इंटरेस्ट रेट है दैट इज मच हायर कंपेयर टू आपका यूएस. ठीक है, अब क्या हुआ, देयर इज अ मार्केट सिनेरियो. मार्केट सिनेरियो क्या है कि आपका जहां पे ग्लोबल क्राइसिस या अदर्स ऐसे सेंटिमेंट बन रहे हैं. इन दिस पर्टिकुलर सिचुएशन व्हाट इन्वेस्टर यूजुअली डू, they withdraw their money from emerging market and they shifted to the stable market or developed countries. ठीक है, तो क्या होगा ऐसी सिचुएशन में, अभी तक हमने इंडियन मार्केट में अपना पैसा लगाया हुआ था बिकॉज यहाँ पे रिटर्न ज्यादा था, बट नाउ वी विल, क्योंकि हमें पता है कभी भी ऐसा फाइनेंशियल क्राइसिस आएगा, दीज इमर्जिंग मार्केट और अंडर डेवलप्ड मार्केट दे विल गेट इम्पेक्टेड. बहुत बड़े उसमें आपका उन पे इम्पैक्ट देखने के लिए मिलेगा बिकॉज दे डू नॉट हैव दैट मच ऑफ फाइनेंशियल स्टेबिलिटी कंपेयर टू डेवलप्ड कंट्रीज. तो फंड्स यहाँ से निकलेंगे और आपका जो हाई यील्ड करेंसीज है उनमें से फंड निकलेंगे एंड दे विल शिफ्टेड टू लो यील्ड करेंसीज. ठीक है, सो द हाई यील्ड करेंसी में डेप्रिशिएट शार्पली, ऐसा हो सकता है रुपी का वैल्यू बहुत तेजी से गिरेगा, कॉजिंग इन्वेस्टमेंट लॉसेस. लो यील्ड करेंसी विल कोलैप्स, नो दे विल नॉट कोलैप्स. ठीक है, डॉलर यहाँ पे ज्यादा इंपैक्ट नहीं दिखेगा. ठीक है, interest rate both countries will cover this, no, option A only will be right answer for this one. Yes, so during a risk of events, it is called risk of events. ठीक है, investor unwind carry trade by selling high yield currency and buying safe havens ऐसा. ठीक है, so usually you can have a relation like developing countries to developed countries. ठीक है, next one. Under the Basel III framework, which of the following is a key regulatory requirement for bank to assess market risk in their trading book? ठीक है, मार्केट रिस्क, सो आपका एक्सपेक्टेड शॉर्टफॉल, ये हमने डिस्कस कर लिया था, सॉरी इट वाज अ रिपीट क्वेश्चन आई गेस. ठीक है, कैलकुलेटिंग एक्सपेक्टेड सॉल्व, हाँ इट्स अ रिपीट क्वेश्चन, सॉरी. ठीक है, नेक्स्ट वन. ओके, दिस इज इट. सो गाइस, दीज वर सम क्वेश्चन बेस्ड ऑन ट्रेजरी रिस्क मैनेजमेंट. आई होप, देखो ये आपका इनके साथ मोस्टली वी आर रिवाइजिंग द थिंग्स ऑफ योर मॉड्यूल बी इटसेल्फ. ठीक है, ए और बी का रिवीजन भी साथ साथ में आपका हो रहा होगा. ठीक है, तो ये सारी चीजें कहीं ना कहीं डायरेक्टली या इनडायरेक्टली हमने आपका मॉड्यूल बी या मॉड्यूल ए के अंदर आपका डिस्कस करी हुई हैं पहले भी. ठीक है, सो वो सेम चीजें आपका कहीं ना कहीं यहाँ पे ट्रेजरी और मॉड्यूल बी आपका दैट इज रिस्क मैनेजमेंट, दे आर interlinked. So while you come to the module D, they have linked with module A and some topic of module B also. All right. So I hope you enjoy this particular practice. चीजें आपको समझ में आ रही होंगी. ठीक है, तो रेगुलर ऐसे आपका चीजें प्रैक्टिस करेंगे एंड इफ यू गो फॉर BFM यूनिट वाइज मॉक. ठीक है, सो यूनिट वाइज मॉड्यूल यूनिट वाइज मॉक टेस्ट. ठीक है, सो आई हैव ऑलरेडी अपलोडेड फॉर मॉड्यूल ए एंड बी, तो जहाँ पे यू विल गेट 200-300 क्वेश्चंस एंड यू कैन अटेम्प्ट दोज पर्टिकुलर मॉक टेस्ट एंड नंबर टाइम. ठीक है, तो जब भी आप फ्री होते हैं मोबाइल में आप चलाते रहिए, उनके जो डिटेल सोल्यूशंस आपका दिए गए उनको पढ़िए. ठीक है, इफ यू आर नॉट गेटिंग दैट मच ऑफ टाइम टू वॉच द वीडियोज एंड ऑल. ठीक है, तो वो उसका एक अल्टरनेट सोल्यूशन है. इफ यू प्रैक्टिस अगेन एंड अगेन, सी डेटा इज स्टैटिक एंड कॉन्सेप्चुअल, तो वो धीरे धीरे आपके कॉन्सेप्ट्स को बिल्ड करता रहेगा. ठीक है दोस्तों, तो आज के लिए इतना ही करेंगे. आई विल सी यू टुमारो एंड इन आवर नेक्स्ट सेशन वी आर गोइंग टू डिस्कस आवर सेकंड लास्ट यूनिट फ्रॉम मॉड्यूल सी विच इज डेरिवेटिव्स. वेरी इंटरेस्टिंग वन. ठीक है, सो अगर आपने कॉन्सेप्ट वीडियो नहीं देखा पहले कॉन्सेप्ट वीडियो देखिएगा. ठीक है, सो देन वी विल अंडरस्टैंड द यूजेस ऑफ डेरिवेटिव्स एंड द ओवरऑल यूजेस एज वेल एज uses of derivative by treasury, which is usually for hedging and speculation purpose. So I'll see you tomorrow. So this is it. Bye bye. Take care all. Have a nice day. Thank you.